Welcome. You're listening to The Best of Investing. I'm your host, Edward Brown, along with my co-host, Mark Hanf and Nam Phan of Pacific Private Money and Patty Cohen of Compass Realty. Our phone number is 888-912-1190. Use that number to answer the trivia questions for a 5-pack tanning certificate given away during this show. That certificate's not sponsored by the radio station, but by Tan Bella Tanning Salon with 2 locations in San Francisco and 1 in Marin. And as soon as we get out of the shelter in place, you'll be able to use those certificates. Today's trivia theme is general trivia. Nam, you want to go ahead and start us off?
Yeah, I want to start off with an article that was put out, or a report that was put up by Compass Real Estate, which is the company that Patty works for. And in this report came out just a couple days ago. So this Compass report shows the housing market hit bottom in mid-April. So it says the detailed report gives a market-by-market look at the global pandemic's impact on real estate. And they go on to say every region in which Compass operates saw a dramatic decline in listings going under contract as a result of COVID-19 back in March, and the accompanying economic sluggishness. But a new report that came out this week showed that the bottom appears to have already passed. And they go on to say that in every
California or nationwide?
Nationwide. Well, it's in the markets that they service, so they're spread across the country. Yeah, in many major metropolitan areas. And they said the bottom hit, across a range of dates, but all in mid-April. And now things are, coming back. And I think, Patty, you've mentioned that a few times in the last month when you've been on the show.
So even though the unemployment figures keep rising, this sounds pretty good news, though.
Yeah, I mean, people still have the money that they had before. Unfortunately, 40% of people making less than $40,000 are hurting the most. But our market is on fire right now. I mean, for example, in Marin County, we have 486 listings right now, and typically at this time of year we have 600. So, and we've got 217 in escrow. So things are moving, and buyers are very, very, very motivated.
So you were saying that 40%, was it 40% of the people under a certain economic level?
Yeah, nationwide.
Nationwide, okay. So, I mean, it kind of, especially in the Bay Area, that kind of sort of answers the question of, like, where are all these buyers coming from? I mean, it's, the Bay Area has such, so many wealthy people in California in general that they're still actively engaged in buying and selling it, especially in the markets that you service.
I'm finding that the profile of the buyers have not changed. We have a lot of move up buyers and a lot of move down, mostly move up. We have a lot of people coming from San Francisco, which we always do, but I predict that there's going to be more and more of that. And then we also have people like senior citizens relocating here. Like I'm getting an offer today on a condo that I have listed. It's a guy from Wisconsin that it took him 2 years to sell his house, and it just got into escrow during shelter in place and already closed. I mean, people that are doing business right now across the country, buyers, they're serious, they're motivated, they're not making waves, and they're closing.
Interesting.
Wow. And you're saying that there's 200, and I can't remember exactly what the number is, of the listings are in escrow, so it's about half of the active listings. Is that normal that you have?
Well, no, not really. There's 486 listings, and an additional 216 are in escrow.
Oh, got it.
But it's still it's a decent number.
Yeah. But that's still the total number of active listings is down. It's just that the ones that are on the market are getting activity.
Well, yeah, and we're just ramping up. Typically, we'll have 600 on the market, but our spring season is delayed. So instead of starting March 15th, it arguably started May 1st, and I think it's going to go through July. So we're going to have like a big summer. Now, I think anybody that's even thinking about selling should jump in, because spring, all bets are off with the virus, and it's just the typical pattern of spring peaking, and we just started it. So it's going to ramp up to that 600.
I mean, it'll be kind of interesting to see with schools whether or not they're actually going to open.
I know.
I mean, some of them have already said, we're not going to open for a while, but, September, October, November, who knows when. I wonder how that'll change the buying or selling market. Because a lot of
It
times,
sure changes parents.
yeah.
Parents, you know, how are they going to get to work? Who's going to take care of the kids? Yeah.
Well,
You know, it's interesting. You know, there's a blog site called Curbed. Patty, you've probably seen it from time to time. They're not a mouthpiece for the real estate industry at all, and they have a headline: "The economy is tanking." This is a blog post from this week, actually today. The economy is tanking, so why aren't home prices dropping? And the very essence of the article is what we've talked about on the show for the last several weeks: supply and demand. It's a completely different ball game this time around than 2008.
Yeah.
There's just so much that's different, and it's funny because other parts of the media, I think, can continue to promote, you know, doom and gloom, and it's going to take a long time for us to work our way out. And look at unemployment. How can you say housing prices aren't going to go down precipitously when unemployment is at a historical high right now? It's because supply and demand. It really is. And sellers just aren't going to drop prices if they don't have to.
Well, yeah, and a lot of sellers are kind of shocked, and so they haven't put their houses on. So we have more buyers than sellers. But a lot of sellers are still doing what they planned on doing. March 15th, we just started 45 days later.
Do you think the way listings will be sold, you know, with the changes because of shelter or because of COVID, do you think that's going to continue, like limited open houses and people having to? Okay.
I do. And people are taking it quite seriously. Like one seller today said she was very upset. I wondered why. Well, the lights were left on, and it was not about electricity. It was about, if the lights left on, that means someone touched the light switch. You're not supposed to touch anything.
oh, interesting. Hey, we're going to cut to our first commercial break here. We're talking general trivia. First trivia question. I got some easy ones for you this time. What was the name of German flying ace Manfred von Richthofen? What was his nickname? All right.
Oh, God.
Call 888-912-1190. The first caller with the correct answer is going to win that tanning certificate, which you'll be able to use as soon as the COVID crisis shelter in place is over. All right. First trivia question. What was the name of German flying ace Manfred von Richthofen? Richthofen, excuse me. All right. Stay with us. The Best of Investing will be right back. Welcome back to the Best of Investing. Again, I'm Edward Brown, your host, along with Mark Hunt, Nam Phan, and Patty Cohen. First trivia question. What was the nickname of German flying ace Manfred von Richthofen? Nam?
Curse you, Red Baron.
Yeah, that's right, the Red Baron. I thought you were going to say Snoopy.
Snoopy said that.
Yeah, that's right. In fact, there's kind of a fun Paul Revere and the Raiders song about that too. Let's see here. I wanted to make just a quick mention before we get back to that real estate stuff. I just read that the UK government offered its first ever negative yielding bond. It raised $4.6 billion selling a 3-year government bond yield known as a GLIT, G-L-I-T, GLIT. With a yield of negative 0.003%. So basically, you've got to pay the government a little bit to hold your money for 3 years. And Germany and Japan apparently have also offered negative yielding debt instruments. So this is not the first time a government has done it, but it is the first time for Great Britain. I still kind of look at it and go, who would buy a negative bond? And apparently it's
well. Let's talk about that for a minute. And again, I don't know like the expert egghead answer for it, but I got to assume that you can't keep large sums of money like that in a bank checking account at risk. It's not insured. There's probably obligations by those that have decided to invest in those negative returning bonds that, you know, they've got safety requirements, and they have to put those into certain types of securities, I guess. I mean, I don't know what other reason why they would.
Apparently, governments are buying them to devalue their currency. So, I mean, we'd have to kind of get an economist on here again. Yes, Gary Schlossberg from Wells Fargo. He's been on the show a few times. We'd have to ask him, you know, because I don't know how many individuals would do it. Apparently, you know, if the government's going to charge you like on checking accounts, then you save on the fees. But I mean,
Well,
Yeah.
for an individual, I mean, if you have a checking account that charges you money to keep your money in there, but it's FDI insured for $250,000, you put it in the bank, you know, up to that amount because no matter what goes wrong, you believe that there's an insurance company backing, you know, behind there. But of course, if everything goes to heck in a handbasket, even the insurance company is not going to be able to pay. The Federal Deposit Insurance Company might be in trouble there too.
I don't know. My mattress seems to be a pretty good place to hold up.
I
These
love
days-
my
My
mattress for cash.
$315, yes. Instead of down
Don't
comfort.
give out your address, Edward.
Give out your address. Yeah. I'm coming over to your house later, Edward.
Yeah, instead of goose down feathers, I've got dollar bills stuffed in the mattress.
Dollar bill.
Comfortable.
$316 doesn't go far though, I'll tell you. Okay, Patty, you had some very interesting stats for us that you want to share.
Well, yeah, I mean, when this all went down on the 16th of March, people were, you know, tenants were talking about not paying rent and you don't have to, and
Yep.
people were not going to pay their mortgage. And the truth is, the statistic is nationwide, for April rent, 95% paid their rent.
Okay.
And in 2009, it was 98%. In May, now this was as of the 6th of May, 80% paid. And last year it was 82% because there's always a percentage that don't pay on time.
Yeah, I was going to say May 6th rather than May 20th or something.
Yeah.
You know, it's interesting. I don't know how true this is, but I did get an email from a company that was making loans in California for 50 years. And they sent out an email saying, that's it, we're done. We're not lending in California anymore based on some AB 2055 or whatever bill it was that was trying to get passed. Now it hasn't passed yet, and they even said in the article that the email that it'll probably get watered down. But it was ridiculous. It was like you don't have to pay for 6 months, and then you can ask for another 6 months, and then you can have one more 6 months where you don't have to pay. I mean, it was ridiculous.
Yeah.
Well, that's a horrifying potential bill. And in fact, Edward, you shared with me an email from a company that buys notes from us saying they will no longer buy notes secured by real estate in California. And they just assumed that something like that, even watered down, was going to pass. They just say, no, that's it. It's expensive enough to live here. We're not going to be insulted by them trying to take our money away from us by forcing us to make loans to people and then not allowing us to foreclose or evict or conduct any kind of action against them if they decide, I'm not going to pay for the next year.
Well, that's the thing is this was so egregious the way it was apparently coming out the gate, where
California communists.
You didn't have to prove that you needed the break. All you had to do
that's just it.
Just do it.
I don't want to pay.
Yeah.
Well, it's funny. Here's an article from Forbes today that says, according to their survey, 70% of homeowners who took advantage of forbearance didn't need to.
I believe it.
Yeah.
Those people will be at our doorstep next year when they find out that the banks will no longer finance their real estate purchases because there's a memo section in their credit report that says they applied for forbearance, even though their credit score didn't change.
We're going to
Yeah.
get it. We'll
talked
talk about that
last time, and I
yeah.
looked into it a little bit. Because even if the bank doesn't report anything negative, it still will show that for those months there was a zero payment.
Yeah,
Yeah.
that's a very good point. Plus, as Mark says in the comment section, it'll say something about that. But you know what? If those rules are going to pass the way they are, then how come I can't go to the IRS and say, you know what, I just don't want to pay,
Yeah.
right? And do I get to go to a Safeway and just start taking food off the shelves and say, COVID, I don't have to pay, COVID, you know?
I know. Oh, good.
Edward, I want you to be the first to try that. You threatened to do that with PG&E and Comcast.
Exactly.
Past you.
He's sitting in the
I'd
dark.
rather
Can you
see
do
him
it?
do it Safeway. There's a little
Yeah.
See how it goes.
If I do it with PG&E, I'm going to be reading by candlelight pretty soon. Just crazy.
So just to circle back on that, and again, you wonder, so Forbes writes 70% of people taking advantage of forbearing on their mortgage payments didn't need to. Apparently they reached out and conducted a number of interviews, and they said that the primary reason they were hearing was essentially that the homeowner simply wanted to break from their normal monthly payments. Which again, if it's a total freebie, why wouldn't you?
Yeah.
They also said the mindset was most common with millennial and Gen X homeowners, which goes to show you they were probably too young to understand that that this, they don't have the experience on how, delicate your credit is and how important it is to maintain credit, and how you really don't want to do something that's going to haunt you for the next 10 years of your life. So it's really unfortunate for them.
Well, it's sort of like when people file BK who just, they have $20,000 in bills and they file BK. And it's like, you don't realize the effect, how much further that's going to go. I mean, BK is there for a reason for people who really need it. Hey, second trivia question is, who lives in a garbage can on the TV show Sesame Street? This is for all those 4-year-olds who are listening to this show, learning about
former 4-year-olds.
Former 4-year-old.
Wait, what did you say, Noam? What? About
former 4-year-olds too.
Yeah, that's true. Okay, call 888-912-1190. First caller with the correct answer is going to win the tanning certificate. Who lives in a garbage can on the TV show Sesame Street? All right, stay with. We always have fun here. Stay with us. You are listening to The Best of Investing. Don't touch that dial. When we come back, we've got some very interesting email for our panelists. Welcome back to The Best of Investing. Again, I'm Edward Brown, your host, along with Mark Hunt, Noam Phan, and Patty Cohen. Our second trivia question was, who lives in a garbage can on the TV show Sesame Street? We always ask the most poignant, up-to-date trivia questions here on The Best of Investing. And that
Oscar.
would be Oscar the Grouch.
Oscar.
Oh, nice.
Oscar the Grouch.
Yeah,
That's
right.
It came to me.
Yeah.
That's
Beating my head there trying to remember.
on The Odd Couple, because he was kind of messy, and sort of in a garbage can. All right, a couple of emails come in. Mark and Noam, besides your fund, what other products do you promote?
Do we promote? Quite a few different products, and lately even more. So, besides the fund, I'll start with, what we've had in existence now for several years. We obviously sell individual deeds of trust, or maybe not obvious, but we sell individual notes or deeds of trust when we have a loan that may not be a fit for the fund. And oftentimes we're just selling those on our marketplace, which is Private Money Loans. Okay. And it's privatemoneyloans.com, and it's where individual investors can invest in a single loan. And so with a fund, you have to invest a minimum of $50,000. You have to be accredited, and there's 1-year hold. Where with notes, you don't have to be accredited. You can invest, 50, 100, 250,000. Our typical loan on there, I would say, is about $850 to $1 million these days. And you don't have to invest in the whole note. You can invest on a fractional basis. So that's one way. And then we have started something pretty recent, I think, with our another kind of fund that we have. It's called the Pacific Freedom Fund, and it's for investors who want liquidity. It's what we use it for is to close loans that we're going to then turn around and sell to our institutional capital partners, and typically that's done, once or twice a month. And it's a higher bar. You have to invest a minimum of $500,000. Unless you're an existing investor, we might accept a lower amount. But it gives those investors the ability who are typically between investing in trust deeds, so they have a trust deed opportunity that pays off, so all of a sudden they're liquid. They can park that in our Freedom Fund and earn a consistent return of 7%.
Yeah, it's pretty neat. It's we have 3 funds now. So in addition to selling individual notes, we've got our existing legacy fund, the Pacific Private Money Fund, which is our primary focus. It pays in the high 7s right now, the high 7% range. It's got $60 million of assets under management. Then we've got, as Noam was pointing out, our new fund called the Freedom Fund, which we use like a warehouse line of credit to fund and close loans that we intend to sell within 30 days. And so we're revolving that capital quickly, and we allow investors in that fund to redeem without any penalty or lockup period. And then we've got another new fund, North Star Capital Fund. That's designed to make construction loans and to serve the underserved needs of contractors and major remodelers who have trouble finding financing, particularly in today's market. That fund is a new fund, and it doesn't have a long history yet, but it's designed to produce yields between 8 and 10%. So, and then in a future show, Edward and I will be sharing with you yet another fund that we are in the midst of putting together. That's probably about 3 months away from launching, and that one is a note fund where we're purchasing notes at discounts. Performing notes, not non-performing notes, but performing notes at discounts in other states that provide yields in the low teens is what we're financial modeling right now. So again, a lot of different loan products. One of the things we've become really good at is at Pacific Private Money is raising capital and providing very strong yields to our investors for that money. And in 12 years, we have never lost a single dollar of investor capital. In fact, we've always paid the promised interest rate. And that goes through and current with this current month of May 2020, notwithstanding COVID and some people deciding not to pay their loans, et cetera, we still have very well secured, very well collateralized loan portfolios at Pacific Private Money. And for more information, our new investor tab on our website does share information about our 3 funds, our 3 existing funds, and our trust deed investor portal, privatemoneyloans.com. To find out more information, go to pacificprivatemoney.com. That's pacificprivatemoney.com, and check out the investor tab. And there's more information. We're adding to our website all the time. Kimberly's hard at work on it right now.
Thank you very much.
As we speak, yeah.
And Patty, an email comes in and says, how long should I give a listing to my broker?
Oh, it's a great question.
30 days.
Some part of it, yeah, 3 days, no. I mean, because there's so much gearing up time, and now these days, it used to be 90 days, but these days you could take 60 days just to prepare a property. But when you talk about the really high end, like 4 million, 12 million plus, it's a year, and now generally it's 6 months. Okay. And it just really depends on how marketable the property is. I mean, usually it's 6 months, but some sellers, most really don't care, but some really have a specific need for less, and that's fine. I do a lot of 90 days, 6 months. Yeah.
It used to be like if you were a shrewd and savvy seller or real estate investor, we were told don't ever give your listing agent, more than 90 days. Yeah. They'll always ask for 6 months, but you want to hold their feet to the fire. But you bring up a good point in that nowadays, the real pros like you, Patty, you're putting a lot of time and you're advancing, your own costs into getting everything set up. And oftentimes, especially if it is a high-end property, slightly higher price per square foot than maybe your neighbors, you really, it's a matter of how much energy and commitment can you put in, both financially and in terms of time. If you have a seller who you think is going to be flaky on you, if you don't sell it in the first 30 days, they're going to want to yank that listing from you. So you're really looking for a partnership, a commitment to tell your client that, I'm going to do my best and I'm going to really put out time and money on your behalf to get the best, deal for you. And it may not, you may not be able to do it in 90 days in this market.
Yeah.
And how do people get a hold of you?
My name is Patty Cohn, C-O-H-N. I'm with Compass. I'm based in Marin County, and my phone number is 415-722-4842.
Very good. All right, we're going to cut to our third trivia question here. Approximately how many inches are in a meter? Right? Call 888-912-1190. First caller with the correct answer is going to win the tanning certificate, which is worth over $100. Approximately how many inches are in a meter? Stay with us. You're listening to The Best of Investing. When we come back, Nam and Mark are going to give us a deal of the week, and we're going to talk to Patty some more about some real estate. Don't touch that dial. We'll be right back. Welcome back to The Best of Investing one more time. I'm Edward Brown, your host, along with Mark Humph, Nam Phan, and Patty Cohen. Third trivia question. Approximately how many inches are in a meter?
38?
32.
39.
Ooh.
Oh, it's longer than that. That's right. It's longer than
2 out of
that.
3. That works.
I was waiting for Mark to go 38.1.
Yeah, well, that's why I say
Right.
approximately how much.
Wow.
Nom, deal of the week.
Deal of the week. So, this is, sometimes I repeat myself, but it's to drive a point home, which is, that we do a lot of bridge loans. This one, it's not only is it a bridge loan where we cross against other property that they own, but another one of those stories related to COVID where these folks had a loan in place with what we call a non-QM lender, and 3 days before they were supposed to close, their loan got pulled right from under them. So talk about stressful. 3 days, and they were planning to complete the purchase of a property. And when COVID hit, the non-QM lenders pretty much froze up. And so their realtor came to us, Pacific Private Money, and said, hey, can you help us out here? We've got to close really fast. We didn't close in 3 days. They got an extension. But point is that this was somebody who would never have landed on our doorstep, 45 days ago. And we're just seeing these still. And this was one that closed just earlier this week. It was only $360,000 loan. That's not a small loan, but the purchase price was just a little over $500,000. And in this case, the other component is that it was a consumer or owner-occupied loan, which most private lenders don't do. Most private lenders won't lend to somebody who's buying a home that they intend to live in. And then couple the fact with that they had another home to sell that they had not sold yet. So we used the equity in their departing residence. It was listed but not yet sold as collateral towards on the loan for the purchase. So what we call a cross collateralization. It's a short-term loan. They'll be able to refinance out of our loan into likely, a non-QM loan probably within 6 months.
So it's kind of interesting. You're actually getting more business because of this COVID situation. It sounds like.
Yeah. Yeah. And we're, yes.
You're not,
I was going to say, our rates have gone up.
I just want the audience to know,
well, but
Nom, you're not responsible for the COVID, right?
Shoot.
Right.
No.
I didn't plan this.
Okay.
Yeah, we just happen to have a business model that has always been really a plan B when plan A fails. We serve clients with a transactional distress component, and that might be a glitch in their credit or something that pops up unexpectedly, or there's a need for speed. These are, the typical reasons. And with COVID and the non-QM, the non-agency self-employment loans, that whole market segment freezing, now all of a sudden we're getting applications with appraisals showing, major California lenders who we're very familiar with, who were in the, were in the press as being kind of frozen in place, not able to close any more loans because their credit lines had gotten all yanked. And it was really, this is not a good thing. We're trying not to rub our hands with glee over hardship from individuals and investors buying homes, but we are there in case they, yes, we're charging more, and not a single borrower is glad that rather than a 5 or 6% loan, now they're in a 9 or 10% loan. But to the extent that it's their choice, if you absolutely want to close that real estate transaction that you're either in contract with or you have your sights set on that, our capital is a tool, and it's low documentation. It's very easy. It's a breath of fresh air to get financing through a company like Pacific Private Money, but you pay for the freight.
Well,
At
and
least
here's the thing.
good news with our loan is no prepayment penalties. So you could use our money as a tool, even though the note rate's 10%. If you only hold the note for 3 months, you're not paying 10% for the money.
Exactly. And the thing is, you guys pretty much have to charge those kinds of rates because the investor capital, from the standpoint of what you pay your investors in the fund, you're
cost
paying
of capital
7.5+%. So,
Yeah.
Right.
it's not like investors are willing to knock down your door and say, sure, I'll invest it if you're paying me 3%. I mean, it's costing 7.5%.
No, we don't pay bank rates, which is 1 0.001% for our savings accounts.
Yeah.
We people come to us and entrust us with their life savings for yields around 7 to 8%, and for that, we have to lend it out at 9 and 10% in order to make a profit in our company.
And so again, if people are interested in let's say investing in the fund, what are the qualifications? Can anyone invest?
No, so yeah, as I mentioned in an earlier segment, with the Pacific Private Money Fund, in fact, with all of our funds, you do have to be accredited. So $1 million net worth. For the Pacific Private Money Fund, there's a minimum investment of $50,000 and a minimum hold of 1 year. Now, we did have an investor who said, "Hey, I have $50,000, but I want to have, can I have two accounts, one of $25,000 each?" And in that case, yes, because they have IRA monies, and then they also have cash, which you can't do with one account, but we can certainly accommodate two accounts.
Okay.
In that situation.
And so again, if people want to get a hold of you,
if they want to reach us, they can call us at 415-883-2150, or go to our website, which is www.pacificprivatemoney.com.
all right.
And we'll have another fund Zoom meeting or information session in June. We'll announce it probably coming up on a future episode.
Good.
So,
And then Patty, before we get to another break, I want you to give out your information and give us any little advice to the people out there who are looking to buy or sell.
Okay, great. Thank you. I'm with Compass, based in Marin County. I'm Patty Cohn, C-O-H-N, and I can be reached at 415-722-4842. I have been in this business for 32 years. I've sold more listings than 99.3% of Marin agents. So feel free to call me, no obligation, no matter where you are. I'm happy to answer questions. That's what I do.
Patty, I have a question. We have about a couple minutes left. I mean, where in Marin are you seeing the most activity, or is it really just evenly spread throughout the county?
It's a good question. Even the high end, I mean, price point is a good question to answer too. Like even the high end is moving, but the typical, like it hasn't really changed. Like the typical areas that just fly out the door, like Larkspur, Corte Madera, they're still flying out the door. Like the primo properties that are level, close to town, updated. These days, people want it like what we call done. They don't want to do any fixing up. So those properties are flying. And I think people are, wanting to get out of San Francisco. So it's not so much shelter in place. I mean, it's not so close quarters,
Yeah,
that's going to be a whole different thing, is even if we get out of shelter in place, people are still going to be concerned about being too close to one another, and they want a little bit more space. Same thing with people are trying to figure out a way to keep mom and dad at home because people are not doing so well when they're going to these retirement homes. That's kind of a big thing too. All right, so when we come back, we're going to have some closing comments, so don't touch that dial. Stay with us. The Best of Investing is going to be right back. Welcome back to The Best of Investing. Last time for today, I'm Edward Brown, your host, along with Mark Hanf, Nam Phan, and Patty Cohen. Nam, give us a little optimism, if you would.
A little optimism? The weather's going to be nice this weekend.
True.
No, so, we had, as I mentioned in the last segment, we're going to have a fund information session, Zoom meeting, webinar, whatever you want to call it, in June. So we'll come out with a date on the next show. And it was really interesting. We had a really high turnout in the last one. People just wanted to know, hey, what's going on? Keep in mind this was in April, right in the middle of COVID. People wanted to know what's going on. What's going on in real estate. A lot of our investors wanted to know what was going on with Pacific Private Money. So we want to give another update, although we've been sending updates almost bi-monthly to our investors through our newsletter. But there's some good news. So, in April, we had, an uptick in borrowers wanting to either delay payments or defer their payments to the tune of, 20 to 25 borrowers. In May, we only had 2. So that's a huge drop. And, so I'm optimistic that, and you're hearing in the news, all of the things like flattening of the curve, and the ability to increase the testing, people are following the social distancing protocols. So I just feel like we're coming out of coming out of this, and we're starting to open things up. So by the time June's event will come around, which is in about a month, so much will have happened. But I think it will be good news. So I'm excited to share that in the next.
And Mark, you're sending out information to clients twice a month, right?
Yeah, and we just, Kimberly, our marketing director, just created a, subscribe to our newsletter. We've got it both in email format that we're sending out to people already in our database, but also at our website now. That's an opportunity to subscribe. And, back in the day, newsletters were, kind of these standard boilerplate, boring, stories and recipes and other nonsense. We curate all of our own content. We write everything ourselves, and we only share on a concise level, not a lot of bloviated, boring nonsense, but really, because we have our ears to the road, we can really talk about, what's happening in mortgage lending, what's happening in California real estate. We just have a big network of relationships where we have access to information that you're not going to find in the local papers, and you're certainly not going to hear it on TV or the radio.
Yeah.
By golly,
except on this show.
That's right.
That's right.
We don't just copy somebody else's recipe. We actually try cooking it. Name our show.
Oh boy. Okay, and Patty, any last? We got 1 minute for you.
Well, basically, if you're thinking about selling between now and the next 7 years, now is the time. Because we were already headed for, the flat buyer's market. And you put COVID on top of it, all bets are off right now.
Very cool.
Mm-hmm.
Why don't you give out?
Yeah, there's a lot of talk about, is this going to happen again, and it's going to happen over and over again. We really don't know. What we do know is that the market is strong right now and interest rates are low. So this is, unless you have to, I wouldn't just say, well, I'm going to wait till next year and maybe things will be better. They could, they might be. We hope they will, but we don't know that they will be. So
right.
There's an opportunity now to sell.
Very good. Patty, why don't you give out your information?
Thank you. 415-722-4842. And again, it's Patty Cohn, COA10, and I'm with Compass.
Very good. All right, here's our thoughts for the day. If at first you don't succeed, try doing what your coach told you to do the first time. And do it now. Sometimes later becomes never. And just so you know, one time a cop pulled me over and said, papers. I said, scissors, I win. And I drove off. Thought you'd like that. All right.
Yep.
We're going to cut out for today. So tune in next week to The Best of Investing. We're going to be giving away more free prizes for answering trivia questions. Thanks for listening. On behalf of our team, I'm Edward Brown, wishing you the best of investing. So long.